I'm just going to throw out some general questions at first, just about the economy and where you think it's headed. Jay, I know you said straight up we're a GDP company, so we know we've been stuck in this sluggish growth pattern for years here. What are your thoughts on where we're headed?
Yeah, we don't have any, or I don't have any, crystal ball as to say where we're headed. If you asked me a year ago, I would have said we seem to be, bumping along a little bit, and we still seem to be bumping along. It was refreshing to hear, some of the commentary earlier in the day that, might suggest we're bumping along at a slightly higher rate. But there's nothing in the data that we see, and we have vast amount of data relating to workers' comp insurance and general liability insurance, which is priced off of, in part priced off of sales values. Lots of insight into where the economy has been, and there really hasn't been a whole lot of change. So just more of the same is how we think of the world, and we'll adjust accordingly when we see otherwise.
It was interesting in your comments, you suggested higher rates would benefit your investment portfolio, but do you think that higher rates at this point could hurt what many are still calling a struggling economy? I'd ask that question.
No, absolutely right on point. I mean, everything is related. So, to the extent that we have higher rates, let's dissect what happens to us. It gives us an opportunity to have higher net investment income, but of course we have a portfolio that's got a market value, so the higher rates are going to cause what right now is a substantial unrealized gain to diminish. Hopefully, whatever happens won't happen in a jolting fashion that would turn things on their on their head. One of the things that as a company, as an industry, that we get very, very concerned about is if rates were higher, why are they higher? Are they higher because real interest rates are just moved and the Fed has taken action, or are they higher in some reflection of a changing view of inflation? And in our business, we're kind of unique in that I think we're unique in the sense that when most companies sell their product, they're selling their product knowing what their cost of sales are, and therefore can calculate a margin with some reasonable assurance. In our business, we're collecting a premium, so we know what our price is, but our price is really based on some actuarial estimates based on history and some anticipation of the future as to what the loss costs are going to be when loss events happen, whether those losses are from fire, from weather, from liability claim, whatever it is. And some of these losses happen pretty quickly and they get paid relatively quickly, so inflation isn't an issue. Other losses get paid out 5 years, 10 years, 15 years out in the future. So you're making lots of assumptions as to what those loss costs will be. And to the extent there is some sort of economic shock that causes inflation to accelerate from what we would consider to be very benign levels today to something more substantial, that would have to be weighed against what kind of assumptions we built into our loss costs to see what impact that would have on the company. So you've got the valuation of the investment portfolio that you mentioned. You've got the possibility of higher net investment income. If inflation comes in, higher loss costs, which goes against us. And then, of course, your real observation of, well, what does it actually mean for the economy? And to the extent that the higher rates are causing less business formulation or companies to cut back, that too will have a negative effect. So it's a mixed bag. It all depends on how it manifests itself.
Goes to show what a complicated formula it must be to determine prices and coverage.
That's why every Simon grad should come and talk to the insurance industry, because it's right. No, seriously. Everyone thinks about businesses as being, well, gee, I'm a finance major. I should talk to Wall Street. I should talk to consulting. Everything about our business is all about analytics and drilling down into data and trying to put that data into a position where you can make these informed decisions as to what level of risk you'd like to take in your products, how to price the products, and having an analytical background is just absolutely paramount in that regard.
So Arunas, I'll let you weigh in here. Your thoughts on the economy and how it impacts your business. You're involved in 5 different clean energy firms.
Sure.
And if that slowness that we're talking about and some of these frustrations makes it more difficult for investors, or how you would make plans, strategize moving forward.
Well, at the last company, it was telecom and IT related, so we sort of had a unique perspective with 80,000 business clients on how much they were interested in cost savings, how much they were interested in capital investments. So I still have some friends there at the old company, and they tell me it's more of the same. The last 4 or 5 years was pretty sort of flatline, and they don't see much changing out there in the business community at all. So from that perspective, I think it's going to be that way for the next couple of years as well. That's what their customers are telling them. I think from the startup perspective, we're sort of focused on technologies that are 10x, 20x better than the competition. And when you're talking about things like that are game changers, the whole economic issue about where prices are going, what people are thinking about, it sort of isn't relevant at that point. So hopefully, as these companies commercialize the next 12 to 24 months, we'll be a little bit insulated from some of that.
How's confidence among your investors?
Confidence? Well, again, we're mostly funded through friends and family, high net worth family offices, so they're pretty bearish, I guess, when you talk to those folks about
So
most
it's a
of the
tougher
things.
crowd. Huh?
It's a tough crowd.
Okay.
It's a crowd like in this crowd right here.
All right, and Alan, you came straight out and said it's tough times for the steel industry, and I know you got into some of the role the government's playing, but just curious overall if there's any way to sort of offset that. I know that you mentioned some other interests for the steel industry, how you're weighing this and moving forward through tough times.
Right. I guess we have been trying to find other markets that we can sell our tubes into. One interesting market that is sort of related to the word energy is that there are solar panel projects, photovoltaic panel projects out there, and we've worked with some engineering companies to design racking systems that hold the photovoltaic panels and have our tubes specified into the structures. So that's one way we're trying to expand things. But generally speaking, there's always activity. We have a downturn in the market, but there's replacement of capital that's worn out. There are buildings being built. We just don't have as much activity as we would like. So it's a matter of becoming as efficient as possible, and we're kind of proud to be still manufacturing something in America, and try to do it in a way that's as good as possible. We have a tremendous amount of capex that we've put into the corporations the last few years, trying to make plants as modern as possible. So it can be a little frustrating when all of a sudden you're trying to sell your product and something is sneaking through the border because of the lack of enforcement by customs, because they're too busy with Homeland Security
Really
to find that you could have the most efficient plant in terms of man hours per ton and still not be able to sell, because it must be that the raw materials being used to make the products that are coming in as competing products have been priced at a point that is nonsensical. So it is frustrating. So how are we competing against it? It's a commodity. So how can you differentiate yourself with a commodity? Better be the same as everybody else's, or a little bit better, because it has to comply with a specification that is accepted by everyone. So you really can't deviate from it, but you could maybe be better in customer service, better in delivery. And that's how we try to differentiate ourselves. So that's what you have to do when things are a little bit slower, and we're hoping for an uptick. Hopefully it's coming and not the alternative.
Specific follow-up here, would you be in favor of tariffs?
Well, yeah, that's what I was alluding to earlier, and we do get them. I mean, that's the anathema to me as an economist, free trade. Don't want any tariffs. But it's the fair trade issue. So, as a for instance, where did I write these down? My guy in the energy group here, he talks about HR 1440. This is House of Representatives bill. It's in April 2013, and it's called Enforcing Orders and Reducing Customs Evasion Act of 2013. There's another one from January, HR 166. It's called Preventing Recurring Trade Evasion and Circumvention Act of 2013. You can see that we're getting lobbyists. Well, we have lobbyists, and we get these bills put in, but you can see that just from the titles of the bills, you see the sorts of issues we're dealing with. It's really unfair trading practices that are hard to deal with. There were two more. HR 949, Invest in American Jobs Act of 2013. And that one was really going to step up the commitment to use American goods in all federal transportation and infrastructure investment. Well, and you can imagine, things go up for bid. Not everything has a Buy American clause in it. And you're going to get tons and tons of, literally tons, because I'm in the tonnage business, of foreign-made steel products in infrastructure jobs. You know, are we supposed to be protectionist? You know, it sounds wrong. You know, do you remember Ross Perot?
Of course.
Remember we were having the discussion when he was running for president. We talked about NAFTA with Canada and Mexico, and he kept talking about the great sucking sound that we're supposed to be afraid of, and it was Mexico that he was worried about. We should have been worried about China. That's the great sucking sound. It dwarfs Mexico by orders of magnitude. So it's been a interesting ride, and we've kind of given up our manufacturing to China, and why not be able to go to Walmart and buy things more cheaply? We're addicted to the crack cocaine of China, and are we better off because we can buy things more cheaply? Yeah, but we've decimated American manufacturing. And can we exist as an intellectual entity providing great services and great ideas to the world and to ourselves? I don't know. I'm worried about the future of America in that way.
I appreciate your candor on that. Jay, did you want to weigh in? You looked like you were.
Yeah.
Okay. Well, let me ask you a specific question because you brought up the changing weather patterns. We're going to make a sharp turn here, and I want to talk about Sandy because Superstorm Sandy flattened, as everyone knows, parts of New York and New Jersey. $50 billion was the total damage toll, according to the government. So travelers, you beat earnings expectations during that corner, but you still posted a net loss of $650 million after taxes because of claims related to the storm. And I know you got into some of the analytics involved in modeling, but that event, it was so huge, and I know, Irene, before that, did it cause you to change your outlook, change the way you do things, simply put?
Yeah, it's not, unfortunately, it's not unusual for us to have the losses of that magnitude, associated with storms of that magnitude. So the real question, as the CFO of the company is, was there anything surprising about it?
Okay.
Did we find that we had more exposure in the areas that Sandy impacted or Irene impacted than we had expected? Did we find that there were types of coverage that was getting triggered that we didn't realize we had either written or we didn't price adequately for? The end result was that Sandy was in our playbook. You don't see a storm like that every year. Hopefully you don't see a storm like that every year. But as we always say, that's the business that we're in. And if it wasn't for the losses associated with the products we covered, there'd be nobody paying premiums to us either. So the big issue for us is just trying to understand what the future might look like. The past is the past. We incurred the loss of Sandy. We had a very profitable year last year. We were also profitable in the fourth quarter when it happened. It's the kind of thing that is really just part of our business. But moving forward, the question remains, are we pricing adequately for our product? Is our product properly structured? Do we understand the risk that we're taking?
Are premiums headed up or down?
Well, in our case, you've seen premiums increase in our business insurance area, which is where the commercial coverages are written. In the first quarter of this year, in our earnings release recently, and we're very transparent about pricing actions we take, we saw about an 8% rate increase on business that renewed in that quarter. If you look at our personal insurance statistics, again, things that we publish as part of the quarterly webcast that we do, pricing in homeowners as well as auto was up. In both cases, weather is a component of that. So we look at loss history. We look at that as some not estimation of necessarily what's going to happen, but the risk of weather. Sure. And if these events continue to happen with the frequency that they've been happening, then the insurance industry has to react to that. Otherwise, you're just not going to be in business very long.
Throw it out to the audience if any of you have questions. If not, we can continue the discussion. I'll continue my best.
Someone has a
Moderator.
question over on the right. Well, there's a couple of questions.
Oh, sir?